It is. Now we will discuss after MACD. We have RSI. MACD and RSI are the most used indicators. Remember, an indicator works when everyone is using them. Because everyone is watching them, everyone makes decisions according to them. RSI is Relative Strength Index. This is a momentum oscillator created by J. Wells Wilder, which indicates that the market has overexcited itself. What is its function? It has created a scale from 0 to 100, where if the price is at 0, the market is very, very oversold. If it is at 100, then the market is very, very overbought, right? And how do we identify this? Whenever the price is below 30, the market is oversold. Whenever the price is above 70, the market is overbought. But I prefer to use it sparingly. I just use it after identifying oversold and above 3 to identify overbought on small time frames and 1 hour. I only use the 2080 levels. 70-30 works on larger time frames like daily and weekly. So where should we focus? We need to focus on 3070. On small time frames, focus on 2080. Now, what is the role of RSI? RSI helps you identify tops and bottoms. If it is, of course, overbought, then most probably you are looking at the top and also you are looking at the bottom. But it has another function which is identifying the trend. Its median line, that is the 50 figure when the price is above it, meaning the overall trend is bullish, and whenever the price is below this, below 50, it means the price is bearish. But when the price goes to the third, it means it has become oversold. Reversal is possible if the price goes above 70, meaning the price of the product asset is overbought, so we can also sell it. So we have to be very careful. So RSI has two functions. RSI is basically a leading indicator. Until now, what we have studied were all lagging indicators. Now, what is a leading indicator? If it is overbought, then we will use that overbought information to predict the price will come down. If it is oversold, you will use that information to predict the price will come up. This is trying to predict the future. Is it right, or how accurate is it? This is another question with the way to use this. It is to use it to predict the future. If it goes above 50, meaning bullish, go up to 70. If it goes below 50, meaning bearish, down to 30. It is cheating in key. So this is a leading indicator. We can use it to predict the future. So now stochastic is also a leading indicator just like RSI, but there is a slight difference in its overbought and overshoot condition. If you create this chart, then help from the U. What it does is similar to RSI. It measures momentum and tries its best to predict that the trade might be ending now. It's a kind of magnetic crossover. When its red line is above the blue, meaning it is in the bullish line. When the red line is below the blue line, meaning we are fine. In best friend, its scale is also 0 to 100 like RSI, but it has a crossover present. Like MACD, its crossovers predict the current trend, and on a 0 to 100 scale, it indicates overbought and oversold conditions. So how we use it? In stochastic, if it's above the market, meaning the market is overbought. If it's below 20, meaning the market is oversold. Now, like the RSI, this is also a leading indicator. We are overbought. We will help and try to use that to predict if the price will come down in the future. The price will have a self-retracement or a reversal. So we will predict it will come below 20, and when it comes below 80, and if it is at 20, it will go up. But there is a big difference in RSI stochastic. In RSI, it also oscillates and stays in overbought and oversold conditions for a lot of time. But stochastic is very used to it. See, stochastic can easily enter overbought and oversold territory. It can stay there for a long period. RSI also comes in that it can take a long time, but the ratio and time it spends in the oversold and overbought territory, RSI that is very less as compared to stochastic. So how do we avoid this defect now? As previously predicted, we will combine lagging and leading indicators. We will create a strategy according to our time frame by combining price action support, dynamic support resistance, trend lines, and channels. If we focus on the strategy, our mix will be complete.